Hey, it's Clay, and this will be a video chart on ticker symbol AKER. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this here may look like several days worth of time, it's actually today's price action broken down into 30-minute time slices. I like to this time frame. That does a good job of telling the quote-unquote story of the price. And then in this situation makes mapping out a very logical question quite straightforward. That question revolves around the fact that today the price has made a nice bounce. Not only today, but factoring in yesterday too. When you factor in where the price was at its low point, and now all of a sudden you look at where the price is, any rational person is going to say, yeah, the price has definitely made a very, very nice move. But that does lead to the valid question now of, but is there any sort of true power behind this price movement? Is there any sort of genuine strength? Or is this just some sort of knee-jerk reaction, dead cat bounce type move? I have no idea, but like I said, by using charts, we can make answering that question very straightforward. And in my mind, it all revolves around a single area, and that area is down here. Let's see, what is that? $2.20. Why is $2.20 important? Well, hopefully we can agree on the logic that price movements with true power, with genuine strength, the price is going to progress forward. The price is not going to go back to where it was. I'm assuming you're saying, thanks, Captain Obvious. Of course, if a price movement is truly powerful, it's not going to go back to where it was. That'd be a contradiction. Exactly. So with that in mind, think about 220. Any sort of closes below there, or worse yet, if the price separates to the downside, what would that be doing? That would literally be putting the price right back inside of that range where the chart was, when it was flirting with those lows. Again, going back, not a sign of true strength. Whereas let's say the price pulls back here, behaves in this manner, and then starts to work its way back upwards. What would you have in this situation? Well, you'd have a set of lows right here. You'd have that low down there. If you picture each one of those as stair steps, well, hey, now you have stair steps progressing in the upwards direction. And again, that's the name of the game. That's what a truly strong move is going to do over time. It's going to make progress forward. And in this situation, I'm just defining and quantifying quote-unquote progress, again, as $2.20. As far as levels of resistance are concerned, pretty straightforward right now. It's all about that purple line right there, which is the famous 50-period simple moving average. So keep an eye on that. That'll be public enemy number one going forward. All in all, though, top priority, in my opinion, is not necessarily breaking resistances. It's all about just building higher bases, chipping away at those higher lows, because as long as there's higher lows, everything else will take care of itself. One of the biggest questions that I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together a free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then click on the image that is up on the screen right now and I will email you the guide. The guide itself is very short and to the point, and best part, it's completely free. Thanks for watching the video. Let me know if you have any questions.